Morning all, how are we doing? How is everybody this fine Thursday morning? Hey look, no gym kit. I didn't go spinning this morning. Nice not having to go and do exercise in the mornings. Although I did do a new class on Tuesday called Body Combat, which I do regularly. But they've got this new bit in there where you have to get on the floor and do cross crawls. My arse is killing me. My glutes are not used to doing exercise. Everything else is fine. Glutes, no. Really uncomfortable sitting down. Afternoon, Harold. Morning, even. Christian. You didn't need to know that, did you? Hopefully you're not having your breakfast. Morning, Amy. Yesterday I forgot to delete a pending order on the DAX. When I opened my chart this morning, my yesterday's loss on the DAX was compensated. Good job. Just goes to show, doesn't it? It doesn't matter what you do. This is completely random. You leave an order in there, there's a 50-50 chance it'll go into profit or loss. I've made mistakes like that a couple of times in the past. Sometimes they work, sometimes they're very bad mistakes. You can never tell. Afternoon, Kent. Morning. Why am I in the afternoon? Morning, Kennelly. Danny, Ian, Peter, Andres, Virginia, John. Morning. Martin, AZ, Prince, Gregors. How we doing? US dollar yen moved overnight. No other yen pairs followed suit. No. So the US dollar yen, I looked at this one this morning because it was quite a nice drop off in Asia. It's pulled all the way back into propulsion during the end of the Asian session. So hopefully this propulsion gap will hold and we'll find some sellers to add in during London. The DAX is coming down quite hard. So's the Dow, so that would indicate US dollar strength this morning. So we got some US dollar strength this morning. Not quite sure why. Just a little bit of strength coming in by the looks of things. We've had the Aussie trade balance overnight, but yeah, nothing else. Bank holiday in China? Don't know. There's no reason for this strength. It's just market movement. So strong US this morning. Obviously, that'll bring all the indices down a little bit. But yeah, if you look at all the other yen pairs, sideways, very sideways. So there's no follow through on this yen movement specifically, but there's also not a lot of, the pullback is with the things that have pulled back. Everything that's pulled back against the yen intervention has been based off of news. So we've had news events which have ground other instruments, basically. So not the strongest intervention I've ever seen in my life, but it's holding. So we'll see. Obviously, this is the one that they're interested in. And this is the one that has not managed to get back there. Yeah, so they are holding this yen, US dollar yen. So we'll see. We'll see what happens. Morning, Beggy. Morning, Giraki. Peter. Morning, Toyas. How are we doing? Right. So that's news, basically. There was none overnight. No overnight news at all. I'm just interested in anything that you Japanese are coming out and saying at the moment. There's nothing. So really crap overnight news. Nothing to worry about. Crude, yesterday we had oil inventories drop and crude also dropped on oil inventories, which is the opposite. What you should get on oil inventory reduction is a boost, but obviously it doesn't pay any attention to that. Never has done. All the crude numbers are a reason for the market to move crude. What they are has got nothing to do with the direction whatsoever. Yeah, it doesn't matter. In a typical supply-demand based instrument, a normal one, not oil, if there is a supply constriction and demand goes up, the price increases. So, when there's less supply, we had less barrels by 2 million yesterday than expected, and demand is still up. You would expect the price of oil to rise, wouldn't you? No, not with oil. Oil doesn't do that. Oil does its own thing whenever the hell it likes. It's a total anomaly. But anyway, so yeah, oil coming down very nicely. We are back in the zone that I think is a very good buy spot with oil. We've got 3 minutes to the open, but we were looking at a retracement. We've made the 61.8 now. So this area here is where I said we've actually overshot a little bit. That's where I was really looking for some kind of buyers to step in. We've actually overshot that level now yesterday. So 61.8, 71.9 retracement. Target now increased to $100 a barrel. Perfect spot to buy where we are. Again, I'm giving a lot of analysis on this. I'm not actually trading it. Oil. Just not my bag. I've been stung by it. I don't want to, basically, I don't really want to take a stop loss position on this account. I don't really want to position trade oil either because it could go the other way. It can be affected by a lot of other stuff, but we will see. But yeah, good spot to buy. A lot of weakness, so we should get a bit of strength off of this. RSI is massively extended. Look. DAX quickly before the market opens. We've got a gap fill to complete still to the upside. There's two major gap fills to do. One of these is really, really old now. I think whoever's caught offside in that is dead, basically, aren't they? They're not getting back. So the gap fill we've got to do is here, just under this propulsion gap, which is about 300 ADR away from where we are at the moment. So a long, long, long way. So these gaps at the moment not getting filled, which is very unusual, but just shows the strength of this market at the minute. So yesterday we had the reverse alert put in. Yeah, so market's trying to turn a little bit more bullish. Not that that means anything, but downside potentials on the DAX today, obvious today, very easy. ADR low, yesterday's low, really easy spot. We've got a propulsion gap there, which was retested once, so we need to watch the previous day's low as well. So this level here, which we tested. There's your break, your open. Short at the open. Very short at the open. Upsides, obviously, we're very close to yesterday's high and the previous day's highs within ADR as well. So upside, you've got two areas potentially where we're going to find limit orders trigger before we get to ADR. Then we should see some weakness start to flow in naturally. Downside, we've got those two levels there. So that would be a perfect TP1. TP2 would be down here at yesterday's low. So there's your opening range, 15-minute opening range. That's broken short. Oh, that's a nice bit of slippage. Thanks for that. Yeah, real good slippage today. So it's rejecting the lows at the minute. So my TP is within that previous day's level, which is good to the downside. Yeah, TP2 is good as well in that propulsion gap, so it looks good. So we'll see where we go today. Morning, Day Trader FX. Morning, Asta. Morning, Evans. Financial Juice, in its Asian market summary, suggests there might not have been a yen intervention. Does it? What was it then? What moved the market 400% of its average daily range in 1 minute if it wasn't an intervention? What was it? Someone's got to answer that question, haven't they? So if it wasn't the fact that the Japanese for the last 2 months have been saying, if you keep pushing, we will intervene. And then they came out the day before the intervention overnight and said, we are watching FX moves. If there is a high volatile move, we will intervene. There was a high volatile move. There was a massive 400% ADR. Who was it then if it wasn't the Japanese who said that they were going to do it literally 6 hours before it happened? Financial Juice are off their heads if they think it was anything but a Japanese intervention. And then they come out immediately after and say, we're not going to comment on the intervention, the move. It's the Japanese. In comparison to all group of 10 counterparts, the dollar declined, the yen against... Traders conjectured that official Japanese intervention in the market may have occurred on Tuesday when the yen surged after reaching 150. Early signs suggest that might not have been the case, though. Who are this is the thing I hate about financial juice. Sorry, having a little rant in the morning. Traders. Who are traders? They keep saying this. Traders price in blah, 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 blah. Who? I'm a trader. I haven't contacted you. Have you contacted them? Told them? Who is it? Who are these traders? It's all very like woolly, isn't it? Like that was an intervention, 100%. It's exactly the same as the intervention we had 3 times last year in September, October, and November. 3 times last year we had intervention from the Japanese. They said they were going to do it. They did it. They said they were going to do it. They did it. They said they were going to do it this week. They did it. It's not. What else is it? Rubbish, isn't it? Anyway, yeah. That was an intervention. 100%. If it wasn't an intervention, it was a very clever move by the Russians or the Americans to make it look like an intervention, to make the Japanese look bad. However, if that was the case, do you not think the Japanese would have come out and said, wasn't us. I have no idea what that was. Seriously, guys, we didn't do this. I know we said we were going to, but this isn't enough movement. We were planning to do it here. They'd come out with something, wouldn't they? What they actually came out was, we're not going to comment on it, which is exactly what they've done every single previous intervention. They came out the day after and said, us, sorry, we're not going to comment on the movements. Like, well, do you think we are stupid? So those traders obviously are stupid, because if they don't think that was an intervention, they have to come up with another theory, the conspiracy theorists. Anyway, morning, it's time, outro, Seymour, Jerry, the update.news, Daniel, Brian, blimey, everybody's turning up late today. Would have been rumours that the Bank of Japan were in checking levels, FX rumours. Don't know. There's your 5-minute opening range. So we didn't manage to crack the 15. So there's your 5-minute ORB. Quite a big range today. See if we get some follow through on this down move. Okay, just retested the 5-minute high. So if you're trading the 5-minute opening range today, hopefully your offset didn't get you triggered on that. Double top. That's exactly what the offset is there for in the opening range breakout EA and the new one as well that I'm doing to stop those double tops triggering your orders. So as long as your offset is wider than the average spread you get, if you get a double top rejection like that, exactly like that, your offset is designed not to trigger you into double tops, which we do get, especially at the open. There's my offset. You can see there. I'm using a 3-pip offset basically to make sure that my spread is never 3 pips ever, but I'm making sure that I'm well outside it basically. Okay, breaking short on the DAX. So we got a small low here. So that previous high was tested twice. So we've got a support resistance zone coming up at 1R. So we need to just watch this. May want to buy that level up. Bought it up twice. Failing that, we'll be coming down into propulsion and this low, which is where I would expect the limit orders to trigger somewhere around here, which is where target is today. If we can get enough sellers on board to go low. I haven't covered the news yet, have I? So today's news, we've got construction PMIs for the pound at 930. Again, this is the purchasing managers index basically, and mainly to do with house building, which is obviously massively rife in the UK at the moment. We are building so many properties, it's unbelievable. So this is a good indication of building material costs, which typically are mostly imported. So it's not really to do with the inflation within the UK. It's to do with external inflation. So hence it being an orange. So it doesn't really tend to impact monetary policy much. But as with every news event, regardless of what color it is, the market will use it if it needs to and wants to execute batches of orders. So we might find some volatility on the pound at 9:30 this morning. Main news today is unemployment claims at 1:30. So yesterday's non-farm employment change was not just a miss, it was a catastrophic miss, a big forecast miss. Unemployment claims, they are forecasting to go up. They were forecasting that to go down. So the unemployment claims, obviously, if unemployment change is going to go down, you would expect unemployment claims to come up. Yeah. So we were expecting basically a positive number. What I want today, is a much bigger positive number, which means that, oh my God, unemployment claims are up, which means the unemployment rate will probably rise. If that goes up after that's come down, there's a very high probability of that going up, which means the US dollar comes down hard. So looking for a big higher number today on that, hopefully, and that will drop the US. And then we move into tomorrow, which is the main news of the week, which is the unemployment rate for the CAD and the US. So today's kind of the precursor to tomorrow. So we might have a fairly volatile day today as markets shifting orders around and getting things into place, ready for tomorrow. So we'll see. Banked today. I banked today. Can't remember what I banked today. I'm going to have to look it up. I'll post it in Telegram. Hang on. Pound odd. No, I haven't banked pound odd. That's something else. Euro odd. So got out of Euro odd. If you're not in the Telegram group, but if you're in the Telegram group, you know about this anyway. So that was the H1M5 mean reversion entry on propulsion at Tuesday. Sorry. Straight in, straight out. Target was in propulsion. So this propulsion gap here was my target. Straight in, straight out, done. Nice, easy 1 in, 1 out. The other thing I closed was the Aussie US this morning. So this was 3 positions. So quite a tricky exit on the last long that we had because it was just protracted. Very nice, easy, quick exit on this one this week, though. So got into this on... Where are we? Thursday, Wednesday, Tuesday, Monday, Tuesday morning, basically. The swap got me in on Tuesday. So just 3 orders, straight in, straight out. The only reason I got out quickly on this one was because it's against the US, and I wasn't particularly keen on holding just in case. I don't trust this US. The Aussie dollar is also weak. We've just had the interest rates on the Australian dollar frozen and the New Zealand dollar frozen, which makes the whole Australasian economy weak and the currency weak. So I don't want to really hold Aussie pairs long for too long, really, because I think there's a good chance they'll come down. The US dollar, obviously, as we know at the moment, is really erratic. It's massively strong. It keeps having these pullbacks and then goes, no, actually, we're going to rally again. So I'm worried about a continuation move, which is why I got out of that one this morning. So it's a good 38% retracement pullback. Textbook 38 bounce. Shallow pullback and a trend. Potentially. It may not be. So we've had the structure change. Could well just pull back, put in a new higher low, and then push up for another leg up into 50, 61.8. All these propulsion gaps are targets to the upside, aren't they? But I had 0.5% on the table, so I took it. Bank regularly, bank often. ADRs today, none. Totally flat on ADR. We haven't had enough movement overnight during Asia to hit anything. Market's very calm during Asia at the moment. If you look at the Australian pairs, we've had a good rally up on them, but not particularly big, about 3/4 of an ADR, most of these. So bit of movement, but nothing dramatic overnight during Asia. And obviously, as we know, the yens, it's almost as if they've just completely put the brakes on the yen. They're like, what the hell? And this is typical. Again, you know, when we talk about looking at the past for clues as to the future, this is exactly what happens in an intervention. If you go back and look at the previous interventions that we've had, you get the shock, and then you get the what the hell, and then it's like, we shouldn't do that, we need to do that move. Yeah, it's exactly what happened last time. You go sideways for a few days while the market's digesting what the hell just happened, you know, and you get a news event which triggers that next leg. Today and tomorrow, and yesterday to a certain extent, we had that news on the US dollar. So if we get that negative news on the US dollar, that's going to dump the US dollar. Everyone's going to see the US dollar yen coming down, and they're going to start buying the yen. And then it will all just start to cascade. But it needs that trigger, which we haven't had yet. And non-farm payroll tomorrow, obviously with the unemployment rates, is potentially what could do that. If the Canadian unemployment rate also comes out as a negative tomorrow, that will weaken the US further. So if we get double negative unemployment rates and the unemployment claims are up today, you can kiss the US dollar goodbye tomorrow. And then that yen move will really start to kick in. Inside bar on the DAX this morning. So there's your 5-minute opening range. 10-minute bar was an inside bar. We've just broken out of the 5-minute ORB. Short. So you are short on the 5-minute ORB if you didn't take the pre-market range. So watch this level for potential limits. All right, no limits there. So yeah, there you go. That's gone. So yeah, looking for the lows basically. So 2R target is there. That is the previous day's low. So this is the previous day's low, this blue dotted line here, which is where my target is, which is where we bounced yesterday. So yesterday we closed down, filled the gap, up to the highs, hit a double top, which was a previous support, resistance, bounce back down into support. That's where we're approaching again. So that's where we're going to find the next batch of orders sitting in this propulsion gap. Do I take that off? How much have I got? I'm going to let this run today. I'm due a runner. Haven't had a good runner this week. Had a couple actually, but not a nice 5R runner. So today's the day. I can feel it coming. Morning, Sibu. I can't say it. Sibu Siso. Morning, Rajiv. Outro. Pretty tired. Was watching NCL beat Paris Saint-Germain last night. Don't watch football. Morning, Henna's back from 3 weeks holiday. Very nice. Hope you had a lovely time. 3 weeks holiday. Oh, you must be loaded. Who could take 3 weeks holiday? I've never taken a 3-week holiday in my life, apart from when I went traveling. That was 10 months. But that wasn't a holiday. That was traveling. What's the difference between the opening range EA and the PA toolkit? They're completely different products. No similarity whatsoever. Opening range breakout does one thing. It trades the open of the stock indices. Yeah, the price action toolkit is a manual trading tool. It's basically fast order buttons. Yeah, so it's buttons you can press on your chart to place orders quickly, and it draws in price action. So it will draw automatically draw in candlestick patterns for you, strong closes, long wicks, bullish, bearish, engulfings, all that sort of stuff. And it will also trade the opening range for you, but in a very simplified form. Yeah. So basically, the opening range breakout, I built this first when I was scalping indices, because the thing that's lacking in MT4 is quick order execution and adjustment. It just doesn't exist. So I built this so you can quickly just go bang, 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 press buttons and place orders and place pending orders, cancel them, adjust your TPs and stop losses at the press of a button. And then I thought, while I'm doing that, why don't I just build in stuff that people want to see? So chart patterns and all that sort of stuff. So that does all that. And then I put in the option to trade the opening range. So what I found myself using this for was for trading the open of the stock indices. So I thought, well, let's just build in an automatic pending order for the opening range. And that worked very, very well. And people started using the Price Action Toolkit to trade, there you go, the opening range, yeah, or any range really. And that's where the opening range Breakout EA came from. It was a much more enhanced version of this for just trading the opening range of the stock indices, which is this EA here. This just does that. So yeah, totally different products. The purpose of this is this here. So if you're manually trading, manually scalping, this is your kid. Yeah, you can't scalp manually on MT4, MT5 without this, in my opinion, because you can't do it. Yeah, you can't use these buttons. You go right. I'm going to go long, and then there's a big move down, and you're like, oh crap, hang on. Which order was it? That one. Okay, I need to. Too late, mate. You're out. You're dead. Can't do it. And that's what the Price Action Toolkit's for. It's just like, hit a button. No, don't want to do that anymore. Oh, yeah, that's going really well. Okay, break even. Okay, close half the position out. You know, just all this sort of stuff that should really be in a trading terminal standard doesn't exist. That's what it's for. But have a look, you know, go and have a read up. There's a video on it as well. Just goes through, the video goes through absolutely everything. There you go. Look, that's what I put on there. Look, fast trade execution EA. That's the purpose of it. That's what it does. Right. DAX is being a pain. So we're pulling back on the DAX at the minute out of that propulsion gap. So we are finding buyers here. Looked like we were ploughing through that level, but we are finding a bit of support here. So we'll see. So obviously the structure so far this morning is that, hopefully that. So I want this propulsion gap to hold. Make sure we keep sellers on board if we're going short. If we are not going short today, this is kind of exactly where I would expect us to find some buyers to drive price back up. So next 10-15 minutes will give us a good indication as to who's in charge today. We'll play according to that. Right, so there's your ADRs. As I say, there's none. There's loads of weeklies. I've been through these. We hit these weeklies on Tuesday, some of these, and yesterday we had a load of them hit. So I'm not going to go through all the weeklies again because I went through them all yesterday morning and yesterday morning, I think it was. Yeah, yesterday morning I went through them. So if you want to know, go and watch yesterday morning's replay because they're all pretty much the same, but they all are more extended than they were yesterday. So oil yesterday was already extended to its weekly range. Now we are extended to 150% of our weekly range. So if you look at yesterday's video, everything was extended, or possibly there was a couple of 125s. Now we got a load of 150s. So these are much better opportunities to get into now. However, they are all based off of the yen, the vast majority of them. And it's entirely up to you, but you know my thoughts on the yen at the moment. I'm not really interested in buying anything against the yen. All these weekly range hits are telling you the yen has come down hard. You need to buy it. You can't because you've missed it. Unless you got that profit take move, which literally happened within 1 minute, you've missed your opportunity for the weeklies, haven't you? So these are not, most of these aren't actually tradable. So RSIs, we haven't got any hourlies today to look at. Everything that was extended on the hourly is kind of reversing at the moment. We haven't had a lot that's got really extended this week that I've had opportunities to get into. So new trades this week, Aussie Swiss took one on Tuesday on that extension. CAD Swiss Took one on that one yesterday as a long. Euro CAD. There was a short yesterday, so I got out all the longs yesterday on the Euro CAD. So that was the Euro CAD exit. That was partial exit, and then got out of the rest of it yesterday. And obviously we hit RSI extension to the upside at that propulsion gap. So short now. I need to put a target on that. That propulsion gap, 0.5%. Euro US dollar. Again, so got a long on this one. Targets up in that propulsion gap. That was an entry on Tuesday. There. Pound odd. So these are all obviously ones that we had RSI extensions above 25 or below 25 or above 72 this week. That obviously are now not extended because they have started to play out. That's a nice bounce out propulsion. Look, pound odd. We were looking at this, I was talking to someone in the Telegram group about this one this morning. Enrico, I think it was. Emilio, even. Sorry. So yeah, I mean that's a nice propulsion gap bounce. So we obviously made that propulsion. So we had the accumulation break. Yeah, retested, pushed up, came back, retested. Buyers added into their positions, pushed up, made a new high. So the market structure shifting to the upside. Then we had a reversal alert. We've come back down. We've retested that area again. 50% of the propulsion gap. Buyers have bought it back up again. So the question now is, we've got two battle lines drawn. So the sellers took control of the market in that propulsion. The buyers took control of the market in that propulsion. One of those propulsions is going to give. Which way is it going to be? Is it going to be bullish market structure or bearish market structure? Those are the decisions we need to make. So got into that one. New Zealand dollar, US dollar. So that was a buy from Tuesday as well. Propulsion gap target. So that low there, which was that propulsion gap buy, which failed. They broke that level. So when we come back into this area where the sellers started to sell, which is also 125 ADR today, I don't think we're going to get there today. Potentially that could drop from there. So you have a high, a low, lower high, and then carry on lower low. If the US dollar remains strong, if it doesn't, we're coming back up here. And US dollar CAD was the only other entry new this week, which was Monday. So that was on the push on Monday. RSI extension, we got embedded. So second entry taken on that one yesterday. Haven't put a TP on that second entry, I don't think. So I will now target 150 ADR on that. So target this propulsion gap, which is the closest propulsion. So other than that, everything else, as you can see, is stuff that I've been in for a while or been in for a little bit longer. But that's all the RSIs this week on the hourlies that are sort of now out of RSI extension because the entries were already in. So other than that, we've only got the 4 hours to look at. DAX just pushed back down again. Nice bearish engulfing. So hopefully we can get a retest of this low. And then we'll be off to propulsion if we can break that level. So if we break this low today, here, there's nothing really to stop it until we get back down into yesterday's low. So this propulsion gap will be where we'll find the buyers. But we've got to get through this area yet. So see if we can make that. Give me one set. I just need to adjust an order. Right. Just catch up on the chat, and then we'll go through the RSIs. 4-1. 4-1. Couldn't believe it. Who's NCL? That's as much as I know about football. I don't even know who NCL is. PSG, I know, is Paris Saint-Germain. But other than that, I don't know. I don't watch football. I'm one of those very rare breeds of men that doesn't like football. There's not many of us around. I go to the gym and everything, and I go out for coffee with mates and go down the pub and stuff, you know. And as soon as we sit down, it's like, what do you think of that VAR decision the other day? And I'm like, immediately the male instinct is to sit down, pick up pint, drink, football. And I'm sitting there going, do you not want to talk about Porsches or cars, drifting, I don't know, anything but football? Sorry. We're a rare breed, but I am one of them. I love watching the World Cup. England in the World Cup, love it. And the Ladies World Cup, love it. Any other football? Nah. Morning, Marco. Cebu Seesaw. Cebu Seesaw. Pronouncing your name. I'm still going to struggle with it. Gold. Any ideas? Let me ask. One sec. Let me just ask Mr. Wick. Henna's, no, not me. Yeah. Newcastle. NCL is not Newcastle. It's Newcastle United. He said NCL. That's the first thing that sprung to mind was Newcastle. But then I was like, Newcastle Limited? No, that's not right. Oh, right. So it's Newcastle United, not Newcastle Limited. Maybe that L should have been a U. Then I would have understood. Morning, Keith. I do not like football as well. Prefer activities that require more balls. Not going there. Okay, gold. So oil, 175 weekly. Oil is still dropping. Canadian dollar will probably be still dropping. Not massively, but not doing particularly well. So obviously gold is a cross with the US dollar. So basically what you're trading is the US dollar. So at the minute, obviously, we've had big rallies in the US, which has brought gold down. We've had 2 days of weakness in the US, although not massively weak, but we've had some decent weakness creeping in. Gold is still holding. So that kind of tells me that gold is still being slightly devalued. As the US dollar is dropping, what we're doing is not rising. We are going sideways. So it's kind of a week against a week, if you like. But after a move like that, you're expecting a pullback, which means negative US. So we're waiting for the US dollar news this afternoon. And more importantly, tomorrow, the unemployment rate is the one that's going to really kick it, because the unemployment rate is one of the key fundamentals. Yeah. So if that unemployment rate for the second time running goes up, that will weaken the US dollar further. However, we're waiting to hear what's going to happen with interest rates again. We are always waiting, but there's been talk of the Fed potentially putting them up again, although it's not come from Powell, but we are getting very mixed messages from the Fed, even more mixed message than we normally get. So there is an opportunity for the US to, I think, rally again, but I don't think it'll go for long if it does. And it will require all the other currencies to have negative news for it to be able to do so, because I don't think it's strong enough to make it on its own. So we are getting to a point where I think we're going to start to see a downturn in the US and an uptick in the stock market. So obviously the stocks at the minute are all down because the US dollar is rallying. Yeah, so they're all due a pop. The NASDAQ's the only thing that's actually holding up, as you can see, but everything else is down at the moment. So I would say gold, you want to be looking more for longs than shorts at the minute, but only based off of speculated US dollar weakness. Where it's going to go, nobody knows, but just use support, resistance, propulsion. If you're going to get in long out of that accumulation break there, you're going to be able to get up to there, or there fairly easily, depending on what happens with US dollar movement moving forward. There you go. I don't trade it, so I don't really pay any attention to it unless anybody asks me in here. But at the end of the day, it's a US dollar cross. So if you're trading pound US dollar CAD, gold, they're all the same thing. They move because of the US dollar movement. And gold more so, because gold doesn't have its own currency movement like the pound does, the CAD does, the euro does. Gold sits there and waits for people to buy or sell it. So it gets affected, its price gets more affected by US dollar than anything else. Come on, DAX. Can you just get me down to target so I can concentrate? If this doesn't break this propulsion gap, this candle, I'm going to take a partial because this will be 20 minutes now. And every time we're attempting this level, we're getting bought back. So if this gets bought back, I'm going to take a partial because it looks like it's struggling. It's running out of sellers. But we're getting close. Just want to see a little pop through that propulsion gap down into this level, and then they can buy as much as they like. I don't care because I'll be gone. I'm just moving on my other platform. I'm just moving these positions to break even because I've got a little bit more leverage on them. So I'm just protecting just in case. I'm going to close one out. I think it probably will continue to drop, but I had a break-even day yesterday on everything. So I broke even on everything yesterday. I made about $100 on all 4 instruments. So I just kind of want to get some cash in the bank, basically. And this is definitely holding this level at the minute. They are, every time we're tapping into it, we're getting bought back up again, which, doesn't mean it's not going to get through it, but it means we are finding buyers. So if these sellers have shot everything to get there, they will puke and flip back the other way. And obviously we may well just push straight back up into that propulsion and have another run up at it. But if we don't, and we are going to go long today, don't forget on the bigger picture on the DAX, we have just put in a reversal alert and a retest. Yeah, so we are stopping this downtrend now. So potentially we are looking for the market to start to shift back up on US dollar weakness. So more interested in kind of longs and shorts from my perspective. But as I keep saying in Telegram and I keep saying in here, what my bias is has got nothing to do with where price is going, whether it's above a moving average, below a moving average, whether yesterday was a bull candle or a bear candle. It's got absolutely nothing to do with where this is going in the next 20 minutes. So as though I'm kind of thinking should be looking for longs, price action is saying it's a short. However, price action is also saying it's struggling to be a short. So better to be safe, bank some money, protect your capital. If it doesn't work out, I've got something in the bag. No. Right. Just catch up on chat. Geez, you don't watch football? No. No footy for me as well, Peter. Good. I never used to like it either, but maybe like a year ago. I prefer ice hockey. God, that's a dangerous sport, isn't it? That's basically just fighting on ice skates. I like it. Thinking of starting a trading podcast on YouTube. Can I count on you to make an appearance? Yes. As Outro's just said, I've tried getting Lee on mine, but not much luck. Yeah, I'm happy to give up my time if there's something in it for me. If you've got a podcast with 5 followers and you've done 2 videos, I'm going to give up a lot of my time to sit there and do this thing. No one's ever going to see it. There's no point. So when you become famous as a podcaster and you've got thousands of followers and you're getting hundreds of thousands of views, yes, Other than that, I've got so much stuff to do. I just can't give up the time. So yeah, if you get it off the ground, no problem. Otherwise, it's not personal. It's just I haven't got time to give up. I've been writing a manual for the new version of the hedging EA now for 2 days, because I have Telegram. I have 20, 30 messages every day in Telegram, support on products, people asking questions, talking. I'm trying to code, I'm trying to do analysis, and I'm trading. My day's pretty full. But if there's something in it for me, as in 100,000 people are going to discover position trading, I'd love to spread the word. But if 10 people are going to discover position trading, I'm not really interested. Just from a time perspective. I know it's hard because you're trying to get anything off the ground. Obviously, you can't get it off the ground if you haven't got anything interesting. It's that catch-22, the chicken and egg thing, isn't it? If you try and get a podcast off the ground, you need good content to get it off the ground so that people watch it. But you can't get good content because anybody that's going to give you good content is looking at it and going, well, there's no point in giving it to you because there's no one watching it. It's like launching a brand new television channel and never advertising it. It's like, well, the ones that take off, the podcasts that take off, are the ones that are businesses. Yeah. So like Trading Nut. Yeah. He's a huge podcast on YouTube, isn't he? Why? Because he gets paid thousands for product placement. So what he can do is he can put thousands into marketing, which brings in an audience which the advertisers want. So if you have 10 grand in the bank that you can put 10 podcasts up and put 10 grand's worth of marketing into it, you're going to get a load of followers, a load of views, and everyone's going to go, oh, that's worth doing. And then they're in. But this is the point. It's a business, isn't it, at the end of the day, YouTube? But anyway. Newcastle Limited, yes. Newcastle, the company. They're all companies. They're the biggest companies in the UK, pretty much, aren't they? Football teams. How long have I been trading? 15 years. 16 years now. This year. Right there with you. Hate the sports balls and its obsessive fans. Like what Chat Palmentary said about Mickey Mantle in A Bronx Tale. Now you've lost me again there. Sorry. Mickey Mantle doesn't care if your rent is paid or something. Don't know. Again, if it's a film about football or American football, I probably haven't seen it. If it's about trading, I have. So propulsion bounce. We've got some limits triggering out this propulsion gap at the minute. We are still lower low, lower high. So we are still bearish, but it's struggling down here. We're kind of reverse flagging. If we get a new higher low, higher high put in, that might be enough for the sellers to jump ship, and then we'll pop back up again. So just be careful if you're short still. Might not happen, but it's looking a little bullish. Sellers have been dominant lately. Does that mean the buyers been on the sideline? Well, it does. You don't know what it means. It means that the buyers have either been on the sideline or they've been run over. Intraday, they're in and out intraday all the time. So, but the long-term bias is built up on the indices, work in the same way as everything else. Yeah, long-term speculative moves have profit takes, exactly the same. This is what the market structure exists in the indices as it does in everything. Yeah. Big, strong push, profit take. Push, profit take. Push. That's kind of a flag. Yeah. So profit take. Yeah, it works the same. However, as somebody famous said, and I can never remember the name of them, but these markets will push further, faster, longer than you can withstand. Yeah. So, just when you think it can't go any further, it goes further. And especially true of the indices because they're linked to not tangible products, but they're linked to companies. Yeah. So we are looking at the top 40 businesses in Germany, most of that being the motor sector, BMW, Porsche, Mercedes, Volkswagen. We're looking at their stock prices, basically. Yeah. So if the motor industry is in decline, the DAX will be in decline. And if the motor industry is in decline for a year, the DAX will be in decline for a year. And it doesn't matter what you think, oh, they've got to take profit on this thing. If there's an industry sector tanking, it tanks, and it doesn't stop tanking until there's something to stop it tanking. Again, there's fundamentals included in all stock indexes, but they're not fundamentals from currencies and countries. They're fundamentals from industries, sectors, which is why I keep saying every now and again, you'll hear me say it regularly. If there's a big move across all indices at exactly the same time, that's a stock sector sell or buy. So they're selling a sector or multiple sectors at once. So when you're a pension fund, you will split your pension risk across FX, across whatever, corn, gold, whatever it may be. You'll put certain amounts into the stock market, but that stock market allocation of 20%, 30%, whatever it will be split up into 6, 7, 8, 10 segments. We'll put X into tech, we'll put X into medical, we'll put X into pharma, we'll put X into motor, we'll put X into da-da-da. And when you suddenly go, looks like because we're all going electric, the production is going to drop across the motor sector, which will bring their profits down, you will pull the motor sector portion and put it into tech if Apple is about to release a new product, which will increase the NASDAQ because everybody in the NASDAQ supplies Apple. Tech will pump. So you'll see big drops happening at the same time, which is why at the open, you tend to see divergence. So we'll have a drop in the US tech and the NASDAQ and the S&P, but we'll have a pump in the Dow because the Dow holds completely different stocks to those two. So their stock allocation is much more service bank based. So therefore, you tend to find if there's a stock sector purchase in the banking, the Dow will rally, the NASDAQ and the S&P won't. Yeah, and the DAX has a real mix of all industries, but is very heavily motor related. So what was the question anyway? I can't remember what the question was. The sellers have been dominant. Yeah. So yeah, I mean, it just doesn't tend to work that way. But okay, so we've just had a higher high, higher low I put in on a doji, which means basically it's a pause candle. So no one won that round. Next round. Morning, Neo. There's so many Forex podcasts getting big these days, and everyone that comes on them sucks at trading. Nobody's had me on AZ because nobody knows I exist. I fly under the radar. Not through choice, but through I don't market. I'm not doing this to make a fortune as a YouTuber, am I? That's the thing. Everyone else that's on those podcasts is trying to sell some course, or they are a YouTuber who makes their income from YouTubing. Yeah, and that's why they're on these podcasts. They probably approach them. I've never approached a podcast. I don't want to do a podcast. I'd be happy to do one. Happy to spread the word, but I'm not going to chuck thousands of pounds into spreading the word. Not what I'm about. Yeah, that's the industry, isn't it? Like I say, the podcast, like Trading Nut, yeah, he makes all of his revenue from selling courses himself and from his YouTube channel, which is nothing wrong with that. It's great. It's good content, but it is a business at the end of the day, isn't it? So now we're talking baseball. Oh, God, no. Well, hang on a minute. Why are you guys all in here? All right. This is the Frankfurt session in London. Why is there a load of Americans in here? You should all be sleeping in bed. You should be coming to the 220 session this afternoon. Why are we talking about hockey, American football, and baseball? We do not play those in the UK. Well, we do, but we don't have teams, right? You guys should all be here this afternoon. So come back at 2:20. Let's trade your instruments this afternoon. You can stay if you like. Sorry. Fundamental or technical analysis, which do you prefer? Great gear. You're obviously new in here. I will show you where to go. Go onto the website, go to Position Trading Bootcamp. Everything you need to know about what I do, how I trade, everything I think about the industry, market, everything. It's all on the website here. Free trading education. Go and watch all of that. Go and watch all of that. Download this Position Trading Handbook. Go and download this PDF. All the important stuff to watch, read, and in what order to do it. This takes you through everything you need to know to catch up with how I do it, and then come into the live rooms, because you're going to ask 100,000 questions, which are all answered in the content that I've spent years producing. It's not going to take you years to consume it. It's going to take you about 25 hours. But to answer the question, fundamentals drive the market. Technicals are historical information about where fundamentals have driven the market. So you can probably gauge from that what I think about technicals. Technicals are great. Yeah, I use them. I have indicators that I produced which show me technicals. Yeah, what you're looking at on this DAX chart is a technical indicator which shows you propulsion gaps, support and resistance levels, and market structure breaks. I've got the RSI, which shows me the relative strength of the DAX, not between the two currencies, because it's an index, but shows me the relative strength of the movement. Yeah, but none of this has got anything to do with where that candle goes next. That candle's going somewhere next based on stock purchases. Fundamentals. Technicals will work to a certain degree, but fundamentals will always trump technicals, because if a bomb drops on New York, the US dollar's going down. I don't care if you're at support. It ain't going to hold. Yeah. If the Fed come out and say we're going to drop interest rates by 0.5% and you're at support, it ain't going to hold. Yeah, so as much technicals as you can put on the chart. We're in a downtrend at the moment. Yeah. If all the motor industry say, actually, what we've decided to do is half the price of our cars and produce nothing but electric starting next year at a cheaper price, the DAX is going to go through the roof. Yeah. Doesn't matter if that moving average says you need to be selling it, it's going up. Actually, it probably wouldn't go up if they said they're going to half the price of their cars, because the shareholders would be kicking and screaming, selling the crap out of all their stock. But you get the point. Fundamentals drive the market. Technicals are just lines and squiggly things on your chart. You should go to Wisdom of Riz. Kadabra, if I went and watched podcasts, I'd never get anything done. You know, I said I don't have time to appear on them. I also don't have time to watch them. I'd love to. I'd love to spend my time doing nothing but watching podcasts, but then I would get nothing done and I'd never make any money trading, would I? This one called Words of Wisdom. He invites all these kids on, and I don't think any of them are profitable. Yeah, probably. But that's what they all are, isn't it? Yeah. Go on YouTube trading. Look at them all. I mean, if you go to YouTube, right? How old's he? Yeah. Day 0, 0. Day 5. Yeah. Like I turned 100 into 7K. No, you didn't. In only 21 days. No, you didn't. Do it live. Do it live. No, you can't. All right, fine. Okay, you know, this is it. Hey, look, there's me. He's just left university. Now, that guy's been around for a while. He might be good. These two have got 3 cars making 750K a week, right? Does Eminem know how to trade? No? Well, what's he doing on here? Sorry, none of this is bought with trading. None of it. It's all bollocks. Absolute bollocks, right? This guy sells courses, guaranteed. I don't know who he is. I've never seen him in my life. But here we go. Let's go to Patreon. Give me some of your money so that I can pay for my fake Lamborghini rental. Yeah, it's bullshit. All of it. The whole lot. It's just, you know, early bird session. Well, yeah, he might be right. But they're all kids. What do you know about trading? Sorry. See if he's doing this in 15 years. Yeah, these are all the guys that are going on to... Now, Jared, he's good. Transparent trader. He's worth watching. Jared. But all Jared is doing, and there's nothing wrong with this, I don't think. All Jared is doing is regurgitating Larry Williams and some of the big, very successful traders' content in a more concise, easy to understand way through thorough backtesting, system parameter permutation testing, and all on high time frame charts. What works? Yeah, not trading 1 minute chart, turning 1,000 into 15,000 in 10 minutes. Bullshit. Yeah. So there's a few guys out there that know what they're doing. But look how old Jared is. Look how old I am. Look how old the people in this industry who make money are. Tom Hurgard. Yeah. We're all in our 40s and 50s. Why? Because we've been knocking around for 20 years, realizing this is all crap. Yeah. That's why everybody, look, come on. Making 70,000 in only 15 minutes trading Forex. Oh, that's Mamba, isn't it? Right. Okay. Yeah. I'm not even going to comment on that guy. I quit Forex because I was following the Lamborghini crowd, and funnily enough, I couldn't afford to buy a Lamborghini. Yeah, just, you know my feelings on trading education. If you want to know them, go and watch this video. You'll never, ever watch another podcast. Go and watch this video. I'm going to put a link in there because it's important. Go and watch that video. You never watch another podcast again. Seriously. Anyway, we're not going anywhere on the DAX. We are stuck. Zero bias at all at the moment. I'm going to leave it on. It's going to break one way or the other, isn't it? So we'll see. But I'll leave it on and see where we go from there. Been a bit of a ranty one this morning, isn't it? I like it. I'm in a ranty mood. Anybody else want to throw anything at me? Jerry, Vancouver, I just stay up for you. Oh, that's nice. I'm watching it while trading, waiting. That's a problem though, Cadabra. Look, this is part of the problem with system hopping. Yeah, you're watching all these podcasts while you're waiting for trades, right? If you're watching all these podcasts while you're waiting for trades, you can't be very, very successful in what you're doing, because if you're looking for something to work, what you're doing isn't working. So all you're doing is you're looking for system hopping material. That's the problem with the industry, is everybody's looking for something better than what they're doing. The very reason it's not working is because you're trading in the wrong way. You're using the wrong methodology. You're using a level of price which makes you lose money. Remove the level of price which makes you lose money and you will automatically make money, which is what I teach in the bootcamp. Everybody that's selling all these courses about and standing in front of their houses and their Lamborghinis isn't making money, because they're using a strategy which physically does not work. It can't work because you're telling the banks and institutions and your broker to remove money from your account with an order. No one in their right mind would hold a gun to their head, shoot themselves in the head, and then do it twice. You can't. Why do you do it with this? Why do you put an order in there that says, take 100 of my £1,000 away, and I'll do that again? Why do you do it? Why do we do it? I don't know. Because we're all taught to do it. I do know. Because all the guys with the Lamborghinis tell you that's how they've made 750 grand in 15 minutes, by putting an order into the market, putting an order to lose and an order to win, and hitting the win one. Well done. Do it again and keep doing it for 6 months live on stream, and then come back and tell me. If you do that, I'll come and buy your bloody course. His name is Lambo Rao. What it is. Anyway, I'm running out of breath now because I've been ranting for too long. We get more YouTuber recommendations whom we can watch. Can we get more YouTuber recommendations whom we can watch? Me. Why do you need to go anywhere else? Unknown someone. I've not seen your name before. Have you watched the bootcamp? Seriously. If you do nothing, right, from this moment on, anybody new in here, go and download the position trading handbook, right? It's totally free. Yeah, go and download the 5 steps to becoming profitable. It's totally free. Everything in that handbook gives you a load of videos, which are on my website and YouTube, which are absolutely free. Watch everything, which is absolutely free. And then make up your mind whether or not you want to follow the Lamborghini crowd. Yeah. Watch everything on the free trading education videos page. You won't follow those guys anymore because you'll suddenly realize where you're going wrong. I can't go through it all now because it's 25 hours worth of content that you need to know about this industry. All you're interested in is making money. The only way you're not making money is by telling the banks to take it away from you. You just don't realize you're doing it because you're taught nothing but to put orders in the market to kill you. Yeah. Look at this. Look at this trade that I took here, long. Yeah. It went down, so I went long. It went down, so I went long. It went up, so I got out. What didn't I do? Lose money. Why? Because I didn't place an order to tell the banks to take the money away from my bank account. Very simple. The market goes up and down all the time. It goes up and down like that, it goes up and down like that, and it goes up and down like that. There's only 3 ways the market moves: up, down, and sideways. If you get in when it's going sideways, you will get out every time. If you get in the right way when it's going up, you'll get out every time. If you get in the wrong way when it's going up, you just have to wait until it goes down and you get out and you'll be right every time. It's a really simple thing, trading. Everyone boils it down into a massively complex thing with lines and squiggly things and this, that, the other. It goes up and down all the time. Press the button, don't worry about it, and wait. That simple. Sometimes you're going to get squeezed to hell and it's going to be pain for months. You're going to make a loss. But they are 1 in 10, 12 months that you're going to get a loss like that. The rest of the time, you're just going to bank constantly. Every day. Just green, nothing but. That's the norm. Just you're not letting it happen. I like your English accented rants. Well, that's because I haven't got an English accent. I can't really help that, dances. I'm English. UJ V-shaped recovery in yeah. So obviously this is still deciding what it wants to do at the moment. This is the minute US dollar strength we've got coming through. Look, so pound US and euro US probably coming down a little bit as well. So this is just a rally from the US at the moment. The yen not really going anywhere, is it? Look, the yen is not moving at all. So this is just US dollar at the minute. So maybe buying into the news and then the news will reverse it. Don't know, but certainly undone 100% of this morning's Asian move, isn't it? And then this morning's Asian move was a little bit abnormal for the US dollar yen. We normally don't get that much US dollar movement during Asia. So why am I waiting for a set? Why I am waiting for my setup? I only trade my setup. Cool. Should do. Harold, you are my last hope. I'm not Obi-Wan Kenobi. I never watched those podcasts. I can tell from the video titles that there isn't any value in it. It is a good entertainment, Kadabra. You've got a point. It is good entertainment if you've got the time to watch it. But the trouble with all content is, you know, I see it with my kids. They sit there and they'll watch a YouTube video, and then they'll get towards the end of it. Actually, they normally get about a third of the way into it, and they get bored with it, and then they go and they click on that, and then they click on that. So they are video hopping. When you watch any content to do with trading, it introduces a new concept or a new strategy to you. You hop to it. Then you hop to it. And then you think, I haven't tried that. What you don't realize is you've got what works, maybe. If it's profitable or break even, it's working, isn't it? What you end up doing is going like that. And all of a sudden, you try that for a month and go, no, it didn't work. But what if I took that little bit and put it in that thing that I had before? No, that doesn't work either. You never go back to the thing that was working. This is the problem with watching new content. And there's always somebody coming out with something new, isn't there? At the moment, it's all about AI. Even Greg Secker's jumped on the AI bandwagon, yeah? the god of education, he's selling an AI thing now. And AI cannot predict the future. The only way you can make money for 100% guaranteed certainty in this market is by predicting the future. AI can't help you with it. It doesn't know. The DAX, does it know which way the DAX candle is going to go? I didn't know it was going to go up. I had a good idea, but I didn't know. And I said we were pausing, and it looks like the buyers are stepping in, and they have. I was right. But I could have equally been wrong. Yeah, I got out because I thought it might happen. I think now, basically, we might find some sellers kicking in here, and we'll pull back. So if you want to get into a short here, you could probably make that much money out of it. I have no idea if it's going to happen. And AI can only come up with 2 binary decisions, up or down. How it makes those decisions will be based on past price action, which has nothing to do with where the banks are placing orders right this second. It can't help. But everybody's going to jump on the buying the AI EAs and the AI strategies because it's in trend, isn't it, at the moment? Something else will be in trend next month and the month after or the next year. So you just buy what's new. You keep buying what's new, but then you suddenly realize all you're doing is you're buying the same thing repackaged. It's a AI moving average strategy. Well, I've got moving average strategies. Throw that one away. It's an AI price action. It detects price action automatically. Done that. Yeah. But you keep buying it. Why? Because you see it. If you stop looking at it, you won't buy it. And you'll suddenly settle on a strategy and understand it all, and it'll all work. But you end up just hopping and never getting any information that's consistent. I don't think it's ever going to stop, is it? Because we're human beings, and that's what we want. We want knowledge. The more knowledge you got, the better you are, right? Wrong. Read 1,000 books. Does it make you a good trader? No, it makes you very knowledgeable about the strategies you've read, but it doesn't make you good at trading. Every trader who cares and brags about their 80% win rate is complete bullshit. It is. Just all, rubbish. Antoine, morning. Lee's content is simply great and worth studying. Yeah, I know. That's why I wrote it. I do brag about myself, but I found this really good website called Forex Live. Are you promoting something, Paolo? Am I going to have to ban you? I'm not even going to look at it. Any trade where you are stuck right now, because every time you stuck in some trade and it gets extended a lot, I enter and earn free money. Cool. That's good. Yep. Many people have said that before. Yeah. So they wait for me to get into a position. This is an old strategy. Yeah, this is a strategy that's been around a long time. I've been doing this a long time, and I've been running live rooms a long time. And people have come up with this strategy many years ago. Like I'm talking probably 3-4 years ago. So you wait for me to get into at least 3 orders. Yeah. And then you take your first one. Because on average, I get into 3 to 4 positions. It's actually 2 to 3 positions is the majority, but somewhere around there is where I get into my 3rd or 4th. That's when the market goes. Because I can't time the market, so I get it wrong at least once or twice before I actually get the one that works. So what people do is they wait for me to get into 3 or 4 positions, and then they take their first one. And you know what? They pretty much get 100% strike rate. Nothing wrong with that. I can't time the market, so just wait for me to mistime the market multiple times, and then you will time it right. The trouble is, what you will miss is all of the trades, like the one I took yesterday. You'll miss all of these. Yeah. In, out, thank you very much. In, out, thank you very much. You miss all of those because I only took one. And the ones where I take one there, out, you'll miss all of those as well. Yeah. So you miss all of this. And do you know what? That makes up about 50% of my profit. So you'd be half as profitable, but you'd have a much higher strike rate. There you go. Easy strategy. Trade that. Can't go wrong. People have been doing it for a long time. I don't know why I don't do it. It's because I'd miss all of those, wouldn't I? This is the thing. You don't know. Is this RSI extension going to work? I don't know. Most of the time it does, but I have no idea if that one will or not. When I get out, people get in. Why? Because every time I get out, it normally tanks. Another good strategy. Do the opposite to what I do. You know, you probably got half a chance of winning that way as well. I guess a good trading consists of 10% strategy, 10% risk management, 10% psychology, and 70% rants. Exactly, Dances. That's perfect example of a strategy. A good strategy consists of taking a very small risk and just going and doing something else, because there's absolutely no way of predicting the future. Look at this Aussie CAD just while I'm on the screen. Perfect example. Right, where we are. Look. Reversal alert. It's pushing up. That is an absolutely beautiful short setup. Look at that. Resistance, RSI extension, weekly levels. Yeah, we've just, well, that propulsion gap wasn't there, but absolutely beautiful. Isn't it? Look, propulsion gap targets to the downside to aim for. It's got absolutely everything. The odds of this working right now are 50-50. Doesn't matter whether it's got confluence coming out of its backside or not. The odds are still the same. So hit the button short and forget about it. Come back tomorrow and see if it's down here. If it is, take it off. If it's not, deal with it. Yeah. That does not mean this is coming down. It means that last time we were up here, we came down, and we've just had the sellers take control of the market. Doesn't mean anything. It means that last time we were here, it came down, and we've had the sellers take control of the market. That's all it means. Doesn't mean anything else. This is why I keep saying, you know, AI's got no chance. AI can read this just as well as I can. It can probably read it better, find it faster, and see it more accurately. But it still cannot predict the future. And neither can any strategy. So your strategy is not 10% strategy, 10% risk management, 10% psychology, and 70% rants. It's 100%. Press the button and just wait. That is all you need to do. But you need a reason to press the button. And if you can press the button when there is a higher probability, which is what this is, because we know that that's where the sellers stepped in, and we know that the sellers are stepping in here, and we know that we've had a good run by the buyers, which they'll probably want to profit take, and we've got propulsion gap targets to the downside. Those are 4 reasons to press the button. That's all you need, a strategy or an EA that automates a strategy. But nothing's going to make it more right or wrong than anything else, because the odds are always binary. Can't do anything but go up or down, can it? Or sideways, obviously. Any update on release of the new EA? Yep, it's ready to go. It's ready to go. I'm finishing the manual. So the manual I'll be finished this morning. If I ever shut up, I will get the manual finished this morning, and then I will press the button. MT4 only at the moment, because I haven't even started MT5. So yeah, it's ready to go. How bug free it is, I don't know. I've tested it. You've seen me test this in here every day for the last few weeks. Every now and again, it comes up with an issue where it says invalid TP or stop loss. I can't figure out why, but it's very intermittent and rare, but it does happen every now and again. Other than that, it's perfect. It works fine. So yeah, it's ready to go. I haven't got any set files to release with it. I'm releasing it as default, which is basically exactly the settings you're seeing me trade with in here every day. I've got to get the manual finished, because basically, as you can see, there's a lot of inputs and everybody needs to know what they do. So I'm down to about here in the manual. So I've got to write that this afternoon. Well, this morning, hopefully, and then as soon as it's done, it's done. Outro, traded with a guy called Tom Dante. I've heard his name before. 2008. We were both in a trading competition at ETX Capital in their early launch days. Who beat their broker trader. Both finished top 3. Good job. I've heard of Tom Dante. A name that's been around a while. Featured in Chats with Traders. Trading Nuts. That was a course there. What a weird website. Free content. Paid content. I've never actually looked at anything he's ever done. I've heard his name, though, for some reason. I don't know why. I think it just stuck in my head because it's quite unique, isn't it, Dante? I'm actually having problems with banking small profits, as you do every day through reversal alert. So should I just trade the RSI on the 5 minutes? Go watch the Bootcamp, Unknown Someone. Everything you need to know is in there. If you're having problems banking small profits, I don't know what your problem is. What's the problem? It's a contradiction, isn't it? I'm having problem making money. Are you saying you're having problems holding on to your trades? If you're having problems holding on to your trades, use the propulsion gaps. Yeah. So look at the propulsion gaps. All these grey ones, yeah? Every single one of these propulsion gaps is a filled propulsion gap. Yeah, so price has made a propulsion move, come back and retested that area. So if you have something that you know that price comes back to with a very, very high degree of certainty, use those as your targets. Yeah, every single one of those, bar those three on the chart, from the 5th of October to the 14th of August, every single propulsion gap, bar three, has been traded back to. So if you are long or short right now, where is it going? Guaranteed. 100% guaranteed. Yeah. Look at what I've just done with the pound odd. No. New Zealand Swiss, US CAD. US CAD. Yeah, so look at what I just did with the US CAD this morning. I think I just did this. This is the one I just did this morning, yeah? So I got into an initial entry here. Target was down here. Or was it down here? I think it might have been that propulsion gap. Price has pushed up, added second entry. Where have I put my TP now? Here. Why? Because it's the closest propulsion gap. So if you're having trouble holding trades, yeah, make sure you just target a propulsion gap. Yeah. So if you're getting in here, your average is here, and it gets down to here, and you get out, right, at that low, absolutely fine. You're not making a lot of money, but you're not losing money. You're a profitable trader. Fine. But look at all these propulsion gaps down here. And we know that 90% propulsion gaps get filled within a week or so on the hourly chart. So target that. That will make you hold on to it. Look at the trades I've got out of recently. Yeah. That was my target here. Yeah. Where did I get out? There. Where did it hit? There. What was my target? There. Going up. Propulsion gap. Pushed into it, rejected out of it. So if you'd have gone long anywhere down here, that would have been your target. Hit. If you are short from this high here, where are you going? There. Or if you want to be super, super easy out, there. It's definitely going to do that. It will probably do that. There's a good chance it will do that. And it may well come down to here. Target propulsion. We know that propulsion gaps get filled. That's what they do. That's why they're there. That's why they're on my chart. They're not there to make it look pretty and confusing. I've had people contact me saying, oh my God, how can you read price action? Look at the crap all over your chart. Tells me exactly where price is going. It might be crap all over my chart. I don't need to read price action, do I? Because I've got a completely automated system that reads price action for me. So it will get me in short if the conditions are met. I will target where I think it's going. All I need is this thing to get me in on a set of rules. My target is discretionary. There's always a discretionary part in trading. If this pushes up out of here and I'm short, where am I going to get in short again? Why? because that's where it came from last time. And this is where the propulsion break started. And we're going to find some sellers. How do we know that? Because that's what happens all the time. Over and over again. Back to propulsion, bounce, limit order triggers, banks, institutions. This is just their footprint. So if you're struggling to know where price is going to go and hold on to it, look at where the banks are going. You know where they're going. It's just trying to hold it. After you've held it a few times, you'll suddenly realize, actually, yeah. Best thing to do, again, and this is something that one of my mentors taught me many years ago. When you get into a trade, I've got this price action, this trade manager dashboard that I built and use to monitor my positions. It's not there to monitor profit. It's there to monitor problems. Yeah. If you struggle to hold a position when you get in, yeah. So let's say we take an Aussie CAD short here, right? Shut the Aussie CAD chart, right? So get in short, set your TP, yeah. And then shut the Aussie CAD chart down. Do not look at it. Right? You are allowed, and this is the rule that I was set, you are allowed to look at your charts twice a day. Once in the morning, once in the evening, okay? To see where price is and see what actions, if any, you need to take. Other than that, do not look at your charts. Set your take profit. Because if you look at your charts all day long, and you are long on this right now, let's say, for example, we got in and we had a limit order sitting there for some reason, we triggered a limit order and we're in profit. If you're looking at this chart right now, you're seeing a support rectangle hold with a 3-bar reversal looking like the bears are taking control. What are you going to do? Exit. Because the market is scaring you out. It scared you out there. It scared you out there. It scared you out there. It's scaring you out now. Where's this going? Here. Where might it be going? All the way up here. So if your target is set there and you got in there and you looked at it there and you looked at it there and you looked at it there, right now you're not seeing this that's scaring you. It will go up and it will just hit your target. The only reason you will struggle to hold a position is because you're watching it. You know, they say about watch pots never boil, watch staring at paint dry, you know, don't look at it. And all of a sudden, everything will start to work. That trade that I took off this morning, what it was, I'm useless remembering stuff. Euro odd. Yeah. I woke up to that. I was asleep when I took profit. I was asleep. I woke up and I'd taken profit. Why? Because I targeted the propulsion gap. I targeted that level there. Yeah. Because I knew that when we sold it, we tested it twice. Then we slammed through it. So I knew when we came back, we were going to test this propulsion gap. That was the obvious spot where we were going to get a bounce. I didn't know, but that's what happened. And that was what I've seen play out 1,000 times. So my TP was at that spot. But the reason I didn't get out, well, it wasn't actually a reason to get out because I wasn't watching it. But if there was a reason to get out, a bullish candle or anything like that, it stops me taking it. I'm asleep. It's the same as being awake and shutting your charts, being asleep. You can't see it, you can't act on it. You can't act on it, it will just go to where you thought it was going to go to. You just don't have faith in your strategy or your system. None of us do. Because we've seen it go wrong so many times, we can't have 100% faith in it. But if you stop and look, this is why the support resistance propulsion indicator paints your previous charts, trades on your chart for you. So you can see, look, propulsion. What happened? We tested it. We tested it. We tested it. We knew that's where the sellers were. So the target was here. Why? Because there's a good probability they would push it back down into this propulsion gap. The DAX this morning, I said down here, wherever it was, we're in a battle between buyers and sellers. Yeah. So when we push up, we made this propulsion gap. We've now got this battle forming, these battle lines forming here. One of them is going to win. It happened today that the buyers were the ones that won. Equally, those sellers could have won, pushed through that propulsion gap and made a bearish market structure. We still haven't made a new high. We're in a range now, aren't we? But Yeah, it's all about knowing where price is going and using a lot size that doesn't kill you or make you worried or scared about trading. That's what position trading is all about, is getting in and getting out, and just waiting for the market to play out. We've seen it happen 1,000 times, yeah, over and over again. Sometimes it takes ages to come and test these levels. Sometimes it happens very quick. Yeah, 4 times they bought that propulsion move, trying to go long. Eventually, another big bank came and stomped on them and said, nah, we've had enough. You can tell it was going to break to the downside. But you can only tell this by seeing it for years and years and years and years and years. At the moment, if you haven't seen it for years and years and years and you haven't got years of experience, you have to trust that these indicators work. I can't convince anybody any more than showing every day what happens. But even then, I still have no more than a 50% certainty on anything. So hold your trades. If you can't hold your trades, shut your platform down. Look at them once a day, yeah? If you're trading the hourly charts, it's going to take a day or two for you to get to a position where you're looking to take profit, right? So if you get into a trade on a Monday, don't look at that chart until Wednesday. Set your target, come back on Wednesday and have a look. What's the worst thing that's probably happened? It might have moved an ADR against you, or it's hit your target. If it's moved an ADR against you, take another one. If it's hit your target, you'll go, that was easy. But if you watch it, you'll get out a break even just in case. Somebody said to me this morning, that's what Emilio said this morning in Telegram. I'm not picking on you, Emilio, if you're in here, but he said on the pound odd, and his exact words were along the line of, yeah, I'm kind of scared it would turn into an uptrend. So he's taken a short up here. Yeah, it's pushed down into there. So I'm short on this already as well. Look. Yeah, it's hit this propulsion gap and it's bounced. High probability of that happening. But where's my target? This propulsion gap. Because that's not enough. That was 120, it's like 0.12 or 0.15% profit. Not enough for me to take. So he said, I'm kind of scared of it bouncing here. If you're scared, first of all, you're over leveraged. I couldn't give a monkey's if this goes up for the next 3 weeks. That is not going to hurt me in any shape or form, right? That makes me 0.25%. That pays about 1/3 of my car payment this month. If it pushes up for 2 weeks, it's going to cost me a car payment. I don't care. But basically, if you're scared about a trade going against you, you've got too much size on, basically. The reason he's scared about it is because he's watching it. Yeah, I don't know what's happening with the pound odd. I haven't looked at it really this morning. It's have no reason. There's been no signal. I might have flicked through it saying, here's my positions this morning. That's all I've done. I've looked at it. My target's down here. One of 2 things is going to happen. It's going to hit target, which is 125, 150% of ADR, or it's not. I can't control it. I've got my terminals disconnecting. Just make sure it's not my internet. Seems I'm still on. Yeah, I mean, this is the thing. If you watch something, your mind will automatically play out the worst case scenario. And you'll be thinking, that's bouncing, that's going up. No, it's not. It's pulling back on a down leg. Think positive. You'll be able to hold longer. Yeah, so it's also, you know, I could waffle on forever about stuff, but it's stuff that is second nature to me just because I've done it for such a long time. But it's not second nature to people that are just understanding how these things work. And, you know, I get out of my trades far too soon all the time. You see it all the time in here. I exit my positions way too early. Sometimes I get it spot on. Look at that. Perfect. That's 1 out of 10. The other 9, I get out and it goes like that. Because I don't know when it's going to turn, do I? I haven't got a clue. I'll use the old, if I knew that, I'd be a millionaire Rodney line. But more difficult when it's a major shift like the pound US dollar play. Yeah. So your pound US dollar, you get caught offside every now and again and you get hurt. That's what we call a squeeze. Squeezes happen. You accept them. They're part of trading. They hurt. This one hurt to the tune of 8% last month. But then when you put it into the grand scheme of the 125% increase over the previous 12 months, Nothing, is it? It's a pullback. It's a pullback on my P&L. That's the way you've got to think of it. This is a 12-month, 12 trade, if you like, system. Every now and again, you're going to get one wrong. You have to take a hit. There's nothing you can do about it. I might take another hit on it this month. If this US dollar rallies, I might take another hit on it, which will be the worst quarter I've ever had. If this rallies up by 200 ADR in the next 2 days, which it's done it that way, why can't it do it that way? I'm out. Happy days, and I'll be banking 3 to 4%. Last month would have been completely wiped out. I'll be on the first week of the month with 3 weeks to go, and I can make all of my money back and more. But who makes that decision? The banks. Nothing to do with me. I'm on board the train. The train is going either down or up. I haven't got a clue where it's going. I've got no way of getting the direction changed, but the only decision I can make is to get off the train if I want to. Drawdown control, and that's exiting your position. So my faith in the market at the moment is shaken on the pound US dollar. However, there's 2 news events which are going to shape the pound US dollar moving forward for the next 2 to 3 weeks, and they're coming out this afternoon and tomorrow afternoon. So I will know tomorrow afternoon if I'm exiting this or whether I'm holding this. I'll have to wait. Nothing I can do at the minute. Wow, there's a lot of chat. Okay, these podcasts are more about the person, not their strategies. Yeah, psychology. You know, there's a lot more to be learned. I can teach you more. Listening to me, you will learn more about the psychology of trading. You will about strategy. Yeah, you listen to me go on all the time in here. I talk about how to help hold position. This is what we've been talking about this morning. You know, how do you hold a position? Why do we do what we do as human beings? It's not, trading is a very binary thing. It's an up and it's a down. That's it. There's 3 constants in trading: up, down, and sideways. Nothing else happens. It goes sideways, it goes up, and it goes down. There's nothing you can do about any of that. The only thing you can control is your risk and your psychology. How you enter has got very little to do with anything. You've got to have a system or a strategy that has a long-term edge, and a methodology of trading that has a long-term edge, which is where all the stop-loss traders go wrong. Because if you use a stop-loss, you are automatically guaranteeing a loss on usually a majority of your trades. If it's a minority, the problem you have is holding the positions to the level that makes it a profitable strategy. So it just fails. It all fails because of that reason. If you position trade, that reason is removed. So the only thing you've got against you is a bank squeeze. Everything else we can survive, no problem at all. So it removes all the crap. Yeah. If you took every single trade and just got out every single trade in a month at break-even level to prove to yourself that the market goes up and down, you have just become a break-even trader. It takes people decades to get to that point. But the only reason you're a break-even trader is because you let the market move. You didn't jump out with a loss every time it went and blinked. Every time the wind changes direction, you take a loss. Why? The wind changes direction, so what's it going to do next? Change direction back. Why? Because that's what it's done forever. If you decide to get out because it's not going your way today, that's fine. That's your choice. But what happens when it goes your way tomorrow? How does that affect your psychology? Pisses you off. So if you didn't take the loss yesterday, would you have been pissed off today? No. Problem solved. Psychology fixed. Simple. Isn't it? That's when you think about it. When I talk about it, but when you're actually doing it, it's not that simple. There's a lot of stuff going on that you have to think about all the time. I made 298 this week on H1M5 and ADR. Might need to drop the HM5 hedge. Got killed in September, yeah. Don't trade them all, Harold. Greg Secker is a fraud. I didn't say that. Daniel Lowe said that, not me. I just repeated his comment. Legal purposes. How much money have you made over your career as a position trader? I don't know. I don't look at it that way. hundreds of thousands. I couldn't say. Over the years, but it pays the mortgage, it pays the car, it pays for holidays, it pays for stuff. But I don't look at it in that respect. It's a job. And again, this is something I was taught by one of my mentors. Not taught, but I mean, it's obvious. It's just something he told me. When you're trading, you're not in control of your income. What you've made in the past has got nothing to do with what you're going to make in the future. In the same way as what the market has done in the past has got nothing to do with what the market's done is going to do in the future. Yeah. Whether this candle is a down candle here has got nothing to do with the direction of the next candle. So you get paid by the market. The market will sometimes pay you a massive bonus. Sometimes the market won't pay you. Sometimes the market will take tax. Other times, the norm, you will make a modest income. You will not make a Lamborghini income doing this. Yeah. But you will make a regular income over a period of a year. And this is the downside to trading. And this is the part that people struggle with, and which is why I've always said you've got to have a minimum of 3 months worth of salary in your bank account before you ever try to become a professional trader. Because the first 3 months of going live full-time trading, yeah, are going to be hell, because you can't pay the mortgage, you can't pay the car, you can't buy the food, you can't clothe your kids, you can't do anything, because this market, if it decides the first month you start, and there'll be people that attest to this last month because it was an awful month, the market will take all your money away. So you need 3 months worth in the bank to pay the mortgage, the clothing, the food, the everything you need to do in case it all goes wrong. Because after month 3, you've got to go and get a job. So you don't get paid regular income. It's like being a director of a company. You get a dividend paid to you when you need the dividend. And the dividend is way more than a monthly salary. Yeah. Look at the US dollar yen. I didn't get out here. I've built a position short. Now, if this intervention move kicks off, this will pay probably 2 to 3 months worth of all my bills. Yeah. If it doesn't pay off, it won't. That's the reality of it. How much have I made? How much am I going to make is irrelevant. You make whatever the market gives you. You're not in control of that. You get in with a risk amount that will give you, if the market goes well, a return. So if you're looking to make a 10 to 15% return a month, that is what you should aim for. If you need to make 50 grand a month, you're not going to make it with a 10 grand account, are you? Yeah, if you've got a 10 grand account, you're going to make 1.5 grand a month. If you've got a 30 grand account, you might make 3 to 4 grand. If you've got a 50, you might make 5 to 6 grand. If you've got 100 grand, you're going to make 15 grand. Yeah. So look at it in that respect. But some months you're going to make a 15 grand loss. Some months you're going to make a break even. Some months you're going to make 35 grand. Some months you're going to make 5 grand. But you've got to look at the whole period of time that you are going to be running a strategy and look at the annual return. It's not about making money on a monthly basis, which is why all these videos on YouTube I've been talking about this morning, where you turn $700 into $7,500 in X number of days, are completely brainwashing these people into thinking that that is how you make money on a regular basis. That guy is a complete fluke if he did it. I could do it. I've done it. I've proven it in here. I've been in the live room trading a funded account with E8, right? And I took an evaluation in the morning. I passed it. I made 8 grand. I took an evaluation in the afternoon. I passed it. I made 8 grand. The next day I had a funded account for 100K. I made 16,000 in one day on 2 trades. Was that any good? No, complete luck. Short. Tick. Long. Tick. Yeah, repeat that for a week. Guarantee that guy is not going to turn that 700 into 7.5. That 7.5 is going to turn into 0. Guaranteed. Not the way it works. You've got to look at it as a long-term thing. It's a business. It's an income. It's a savings plan. It's whatever you want it to be, but it's not something that's going to make you rich. No way near. It will make you comfortable. It will free up your time. Yeah, I haven't got a boss. I sit here and I could be on the stream until midday. I could be on the stream until 8 o'clock. I could not bother to stream. I don't care, because I'm my own boss, because I earn my own money in my own way. But what I don't do is earn a regular income. That's the thing you got to take on board when you try and do this. Which is why, as I say, most people do this part-time, which is why I've got different strategies which work on different time frames. You trade the 5-minute chart and you're scalping, you can make a lot more money in a very short period of time, but you can't sustain that. So you've got to have a longer term strategy which makes money on higher time frames, which use proper market movement. Yeah, bank movement. Banks move over quarterly and monthly cycles. This is what these are. Yeah. So you need to have a strategy that works with the banks, which is slower but makes more money over a longer period of time. You need a lot of it. You need a lot of different strategies, basically. But position trading is in my opinion, the easiest way to make a profit trading, but it's the lowest profit you will get. But this is the problem. There is no balance in between. You've got the high frequency trading strategies like the opening range breakout strategy, where you're in, you're out 15 minutes later with a percentage return. And then you've got the position trading strategies where you're in, sit there for 2 weeks and come out with 0.5%. But you come out with 0.5% 95% of the time. Yeah. But you can't go in with big lot sizing, because you've got to be able to sit through the wrong, which you will be wrong most of the time, won't you? This is why on average I take 2 to 3 positions a trade. But that's trading. Well, I should say that's my experience of trading over a decade. Yeah, that's what I have found myself. That's what I have found that works. But there's some people that sit there and they do stop loss based strategies. People like, I keep talking about Tom Hugard because he's somebody that I follow in Telegram. Well, I don't follow him because I'm in here and he's doing the same stuff. But I read his Telegram channel and I see him going through pits and troughs and things, and I'm looking at it and going, yeah, happens. You lose 50 grand, you lose 40 grand, you get 50 grand back, you get 60 grand back, you lose 25 grand, you make 25 grand. That's how trading goes. At the end of the day, he turns an account into an account size over a period of a year and he's profitable. He's not right most of the time. And do you know what? He doesn't use a stop loss. Yeah, he gets into a trade and says he's going to stop out there. Most of his stops are mental, because what happens is you get into a position and you enter a position and you go long and the market goes like that. Yeah, if you put a stop loss here, you get stopped out. If you don't have a physical stop, you don't get stopped out by those physicals. He will close a position with a point loss. Yeah, I will do a drawdown control when price has moved a distance of a portion, but there is no physical stop there, because that US dollar yen, anybody long from there or there is dead. Anybody not using a stop loss from there or there is in their position, able to exit. The difference between able to exit with a break even and being stopped out is the difference between profitable and not profitable, because of the order. It's the order in the market that makes you a loss, that makes you a loser. Just the way it works. Hell no, I have no affiliation with Forex Live. I literally found them last night. Okay. I don't mind. I've never heard of them though. Paolo, you're sounding like an affiliate. This is the trouble. This as soon as anybody mentions anything about anything, immediately everybody's heckles are up. And they're like, he's trying to sell something, because that's what you're used to, isn't it? Everybody comes and they're trying to sell you something. It's just the way it works. But yeah. Don't mind as long as you thank me later. It's American and I'm English. What's the name of the new EA? It's going to be called forgotten. I can't. Do you know what? I was looking on the MQL5 website yesterday because I needed a name for my product, right? And I was looking at all this. I just basically went on the marketplace and I was like, what shall I call this? And my products are very, 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 very vanilla, boring, right? The market reversal alerts EA. What does it do? It's an EA that takes market reversal alerts. The support, resistance, and propulsion gap indicator. What does it do? It draws support, resist. I could call it something really dynamic and snazzy, but I don't. So I was looking at this like Quantum Emperor, Quantum Wizard, Trendmaster. That's a big XG Gold Robot. SST, Killshot, Deep Trader, Zenvo, The Legend. So what I decided to call it was the Stock Index Hedge EA. Do you know why? It hedges stock indexes. I'm all for keeping it simple. So it's called the SIH, just for short, because I thought I might as well shorten it to an abbreviation because it sounds a bit cooler, but it's a stock index hedging EA. It indexes the stock indexes. It hedges the stock indexes. Yeah, that's the name. There you go. I'm not a marketer. I don't do that. So I didn't come up with a snazzy name. Sorry. If you want to call it something else, feel free. I'm all for coming up with names, but at the end of the day, I'm much more do what it says on the tin type person. So if you look at indicators, my indicators, the market structure reversal alerts indicator, it does what it says on the tin. The market reversal alerts dashboard, the ADR alert dashboard. It could be the market stretched elastic band pingback dashboard or something. But at the end of the day, I think it's much easier if you understand what the hell it is rather than the median and turbo. The valuable zigzag. Valuable zigzag. Prop sense. And all these HTF stuff. Look, this has been the wrong bit, haven't I? Experts. There's a lot of HTF EAs coming out now. Look, network AI. Come on. AI for gold. New genius candles, AI. An AI looking icon. AI, buy it. It's got AI in it. But there's loads of these prop EAs coming out now. They seem to have vanished. They were here yesterday. Which are doing HFT trading. Yeah, high frequency trading. That is not allowed in prop. Go and read the terms and conditions. The one thing they do not allow is HFT EAs, which are basically taking advantage of tick movement. So there's people selling EAs now guaranteed to pass prop firms with HFTs. Just if you're going to buy EAs, people do. Don't buy those if you're going to use prop because they're not allowed. But the guys are just selling them. And then you'll find out they're not allowed. And then they'll go, well, sorry, I didn't know. That's it. They don't care. They don't work either. Justin has the same name as me. Okay. Congratulations. Cadabra still in here. Any thought on scalping? Yep, love it. Can't really answer that. Pound news, construction PMI coming out in 2 minutes. That was probably ages ago, wasn't it? That was 15 minutes ago. Construction PMI for the pound. Let's have a quick look at what impact we had. Pound down. Not a lot. Doesn't seem to have done anything. Construction PMIs. What were they? 45 down. So construction's down, but I don't think doesn't tend to do a lot. Never has. Good to have things put into perspective. Yeah. When you target around 0.5%, where you took a 0.1% risk, is that fair to say that it's a 1.5 R? I don't use that. So you can't use risk reward ratios work when you have a risk. I do not have a risk. So when I enter a trade like this pound odd sell here, I'm in short. My risk is not defined in any way, shape or form. I'm entering with a 0.1% based on a quarter of an ADR of movement. or half an ADR of movement rather. So if I was to use a stop loss of half an ADR, which is 75, yeah, my risk would be $173. But I don't. Yeah, I just need if it was to push half an ADR against me, I do not want to be in more than 0.1% of drawdown on my account, because I may have to add 5 positions to this if I'm really, really wrong on it, in which case I need breathing room. It's all about giving yourself breathing room. If this moves down by half an ADR, I will make a small amount of money. If it moves down by 1 ADR, I will make a 2-to-1 on my potential risk, but there is no risk. Yeah. My risk is basically my entire portfolio on my account. My account is my risk. So I'm taking a percentage of my account as risk. If you're using a stop loss based strategy, you have to have a positive R, because you have to have a reward higher than your risk, because the normal strike rate is 40 to 60% on a strategy. So if you haven't got a positive risk reward, you're never going to make money. But that's why we stop trading, because we put a stop loss here and it comes up and it hits our stop loss, takes us out, and then moves down 3 ADR. And we go, oh, you stopped me out. You stop hunted me. The market stop hunted me. No, it didn't. The market just moved up and down. Yeah, they don't even know you exist. It just moved up and down. You just put an order in to tell your broker to take a percentage of your account away before it went the way you wanted it to go. That's what you did. But you don't realize it because someone's told you that's a strategy. It is a strategy. It is a very good strategy for losing money, but it's not the right one, is it? So you can't use a risk reward in position trading. You have to have a risk. And the initial risk that you place, the initial lot size that you place on your very first position or very first trade in a position, has got to be small enough. And this is what I said to Emilio this morning in the Telegram group. It's got to be small enough that when you press that button, you couldn't give a monkey's what happens. If today we get a move 300 ADR against me, what's the worst thing that's going to happen? I'm going to lose 3/4 of, well, I'm not going to lose anything. I'm going to go into drawdown by 0.75% of my account. Not 3/4 of my account, 3/4 of 1%, 0.75%. That is what's going to happen if this moves 300 ADR, which it doesn't. We got up to 225 ADR on this dashboard because there is only 1% of days a year it goes beyond that. So if the thing that very rarely ever happens, the very worst thing that I will be doing is going, oh crap, I'm 0.75% down. With a what? Opportunity to enter another position when they pull back on that move, which they do 90% of the time, to exit with nothing. That's the worst thing that can happen the vast majority of the time. So this position has to be small enough that you couldn't care less what happens. If you get into a position and it goes into drawdown there and you're going, oh, you're worried, there's sweat pouring down your head, you can't sleep at night, you're over leveraged. You've got too much risk on. Because you shouldn't need to worry about it, because you can't, if you worry about stuff that isn't in your control, you can't live, can you? If you were worried about, I don't know, just trying to think of an analogy you could use, but stuff that is out of your control. If you were worried about walking from here to the shops and getting wet, yeah, you can't control that. So you can't worry about it. It's not something you worry about. You accept the consequences of it. If this goes up and I'm wrong, I accept the consequences. That's it. Nothing I can do, is there? But I need to make sure that I'm not worried about the consequences of it. So that's the risk. Yeah. And this is, if you want to try position trading, stick a 10 grand demo account or 100 grand demo account together and take every position at just a 0.05, right? And just press the button and trade for a month and get out of all of those positions with a profit and look at your P&L and then go, it's all green, but I haven't made much money. Your only decision now is, What do you now adjust this to actually make yourself a living? Yeah. When you understand that the market is totally out of your control and will just move up and down, and you haven't got anything you can do about it, and you will be right, you will be wrong, and you can get out of every trade by just waiting and adjusting your price to suit you, you'll suddenly realize how it all works. And then you'll be like, right, how do I make money doing this? But until you stop using the stop loss, you will never be able to experience that freedom of the market just making money all the time. That's the thing. So you've got to get in small. And then when you go, oh, that's exactly where I thought it was going to bounce, except I couldn't get out with enough money to pay the mortgage. If I'd have gone in with twice the lot size, I could have got out with enough money to pay the mortgage. So what would have happened? And that's where you go into the back tester and see what scenario would have played out over a year if you'd used the lot size you wanted to start with. And give yourself the confidence of that back test going like that. Only on one instrument. And that's without you interfering. If you interfere in it, you're going to make more money because you're a human being. When this moves up to here, yeah, somewhere in that area there, if I've taken a short there and it moves up into there, I'll take another short at that level. Why? Because I've identified a spot that there's a good chance it might bounce at. If you use an EA and that isn't the right level and the EA needs to take a trade there, and what it does is that you would win as a human being. The EA would still be in this trade and you'd be down here and you're still in the same position where you haven't made enough money. This is why human beings need to interact with EAs, because EAs are dumb instruments. They can't see this. And you can't teach an EA every single thing, because whether you pick that as a resistance or that as a resistance or that as a resistance is down to you. You can tell the EA the definition of resistance could be one of those three things, but which one do you tell it to take? You use an artificial intelligence. How does it know which one is right? It doesn't, because it can't predict the future. Just got to get in. You know, get in with a 0.01 lot size for a month on an account of any size and just hit the button. Yeah. And then when it gets into profit, close it. When you've got 100% strike rate and a completely green P&L with absolutely no money in it, you've suddenly become what? A break-even trader? Well done. How many years have you been trying to become a profitable trader? 3, 4, 5, 2, 1, don't know. Might be 6 months, but you haven't done it yet. If you haven't done it yet, that is how you do it. You just got to do it. And you'll suddenly realize that. And then you can go off and make as many strategies as you like. Just use the methodology. I give lots of strategies in the bootcamp. Right, wrong, different, doesn't matter. Use Bollinger Bands, use moving averages, use whatever you like. Just remove the thing that makes the loss and reduce the risk to a point where it doesn't matter. And all of a sudden, it all just happens. You just got to understand this thing will just move up and down. It's been coming down. Everyone's been shorting it constantly. Now the structure's broken to the upside. Everyone's going to start longing it. Might be that. Might be that. No one knows. Nobody knows. Not even the banks that are moving this know whether this is going up or down next, because they don't know what the other 9 banks are doing. You haven't got a hope. If you're using an order that says, if it goes up, I get out with a loss. If it goes down, I get out with a win. You're going to get out with a loss more than you get out with a win, because you can't get it right. Just the way it works. You only learn this after doing 1,000 courses and realizing none of them work. Once you've done your 10th course and you've gone, why is this still not working? You realize why it's not working. And that's what the bootcamp's all about. That's what that PDF's all about. I don't use hard stops anymore since a while. It took me a long time to realize. Yeah. Thank you for subscribing, Dirty Cash. Welcome aboard. Hopefully you're not working for Helpy FX and you're going to spam the chat. John Wick EA. Yeah, I was thinking of calling it the John Wick EA. I almost mocked up a screenshot, a logo for it with John Wick in it. But then I thought, that's AI, and AI's made John Wick, and who owns the copyright to John Wick? And I thought, it's just no point. But it went through my head, AZ, the John Wick the John Wick hedge EA. Because it would sell, wouldn't it? People would buy it. They'd go, oh, John Wick EA, that must be good. It's just, stock hedging imminent Lambo lease. Shill. Yep, that's another good one. We could use that. Oh my God, look. It's Mrs. Healthy FX. Hello. Be nice. I am being nice. Ms. Healthy FX. You sound like Ms. Helpy FX. We know what Helpy FX is. Scam, like everything else. Yes, but 0.1 over half an ADR is a theoretical risk. Yeah. You're not going to take a stop out, but it could still look, yeah. So basically what I do, whenever I get into any trade now, so this trade that you see on the screen here, this pound odd, is an absolutely perfect example. I am looking, when I close a position, to make somewhere in the region of 0.25 to 0.5% on my account or more. Yeah, I don't have a monetary amount. Yeah, let your winners run and add to your losers. Yeah, everyone else is going, oh, what are we all told not to do? You're all told to take a stop. Why? Because the brokers make money every time you do, because you have to press the button again, which pays them a commission and a spread. That's why you're told to take a stop loss, so that you can press the button again, because that's what makes the market money. So I'm not looking to make a specific amount of money. I'm looking to make money, right? And I'll make what the market will give me. So this level here, when I took this end, or rather the market reverse alerts took this EA, market reverse alerts EA took this position for me there based on the criteria I'd said I want to get in on. And that was the most logical bounce point. That was 0.175% and not worth me bothering with. So I am sitting here going, right, well, probably going to test that area at some point. So let's see if it can get down to there, because that makes me 0.4% increase on my account. If it doesn't get down to there, fine, it goes up. And then I will add a second position, adjust my price, and then look for some target that makes me enough money to get out. But I don't have a specific amount. But as you've pointed out, that risk that I initially enter into is 0.1. So in theory, if price moves down anything that is 0.15% in profit, that is a 1.5R risk reward ratio. So that was 0.75 or 1.75 or whatever it was, which in theory I could have taken it off at if I wanted to, but I didn't. But that's your choice, and the decision will be made by you based on US dollar CAD H4 RSI extension. That's pushing that US dollar CAD. That will be decision will be made by you based on what is happening in your portfolio and everything else around you at the time. Yeah, so there is no, and this is why in the position trading bootcamp I say, target half an ADR, because you can achieve it. We know we can achieve half an ADR. The price spends 58% of its time within ADR. Oh my God, what is going on? 58%, that's awful. Of its time within its average daily range. We know that. So if your target is always within half an ADR to 3/4 of an ADR, you'll pretty much always achieve it. It's when you go, I'm getting in here and I'm going to set a stop loss there and I need a 3R. If 3R happens to be 225% of its average daily range and beyond the most recent support level, this is the problem with stop loss based strategies. You can't achieve it because the market's not likely to get to it, because there's plenty of other places on the way that the market is more likely to bounce at. So you choose those. And if those turn out to be 0.25% or 0.5% or 0.75%, so be it. I'm getting out where the market is going. I'm not getting out because there is a monetary value attached to the profit of the trade. Sometimes I do. So the one that I got out of this morning, got to remember what I do. Aussie US. I got out of this, here. Now, there's absolutely no logical reason for me to get out there. The reason I got out there was because I saw 0.6% profit on my account in 2 days. And I thought, God, that's a quick, easy win. Why did I take it? Because I need some profit. That's it. There's a high probability it's coming up to these levels, but there's also a possibility that this is a pullback short. So my brain is saying, you've got 0.6% on the table now. You could hold it for 1%, 2%, or you could get out now in case that happens. What don't I know? What's happening next? Was that a good exit? Damn right it was. Look at that exit. Look at what's happened. But is this going to continue to do that and come up to target? I don't know. But I got out because I wanted to, not because of any other reason. There wasn't a, you risked 0.1%, 0.1%, 0.1%. Your overall risk down to there was 1.5%. Therefore, I need to make 1.75%. Otherwise, I can't get out. I get out because I need to get out. Yeah. There's no maths involved in the exit. The exits are purely, where are we going? If there's a support and resistance that's obvious, I'll use it. If there's no support and resistance that's obvious, I'll look for a propulsion gap. If there's no propulsion gap, I'll just go 0.5%. I just want to be out in profit. That's it. There's nothing clever about it. There's no logic. This one, there was. That exit there was exactly timed because of a number of reasons, but the main reason being we'd gone into an accumulation for a month. Yeah. And during that month, I'd made a profit. There's another one in there somewhere. Could have sworn there's another profit in there somewhere. Might have been that one. Don't know. But basically, I'd made in the region of 1.5%, 2% on it. I'd done drawdown to the control to the value of 0.3% to 0.4%. So I was up. And basically, we pushed into a propulsion gap. And I was like, right, we're in a downtrend. We're in an accumulation. I've got a nice profit, 0.6, 0.7%. I've banked over 1% on it. I've done a little bit of drawdown control. I'm out. The reason for the exit was I'd made enough money and there was a technical. That propulsion gap made a new low. We pulled back into propulsion and started a new down leg. Market structure is short. On that leg, that was the potential. That's what I saw in the future. Whether or not that happened or not, I didn't know at that point. But every single time you are in a trade, you only have two things you can do. You can speculate on price going up or down. What you need to do, and it's as simple as this, is go, if it's going up, where? If it's going down, where? And plan for that eventuality. If you're right, brilliant. If you're wrong, brilliant. Doesn't matter, does it? I was right in this case to get out. If I was wrong in this case to get out, I was still right because I banked a load of money. Yes, you can always bank more money, but every time you go for that runner and it doesn't work out, you kick yourself. Just take it, put it in the bank. Really doesn't matter, does it? It matters what you make, but more important, it matters that you consistently make. Today's stream has been very informative. That's okay. It's been very ranty as well, isn't it? I like a good rant every now and again. I haven't had one for a while. I think I build them up and then they all come out on one day. Right, it's 10 o'clock. I need to get on with my manual. If I'm ever going to get this EA out. So yeah, I'm going to go work on that today. DAX, absolute pain in the arse today from the open. So down, up, down. So again, watch for a bounce here. That's a big drop, isn't it? 5, 10, 15, 20, 21. 35 minutes straight down. 35 minutes straight up. Absolute range. Absolutely no direction whatsoever. Look. This thing has absolutely no clue where it's going at the moment, is it? Good looking buy. See, these are the trades, just before I go. These are the trades which are fantastic opportunities. So if I had the price action toolkit open right now, I would say buy stop last. I'd be pressing the buy stop last button, and it would place an entry there, and it would place a TP there, a stop loss there, because this is a very high probability, high risk reward setup. Yeah, this is a 3R long, which will play out within the next hour or so, or it won't. These are the types of trades which are brilliant to take if you're going to use a stop loss. But if it goes down to there, everybody's losing 0.25%, 0.5%, 1%, 2% of their account. Some idiots who are trying to compound their accounts are spending 5% on a trade. Yeah, you get this wrong regularly, because look at the momentum here. Yes, we're running into propulsion. Yes, we're running into support. Yes, it's a level we've bought before. We've moved up into this high now 3 times, and they've sold from it. So we know that that's where we're going with a high probability. If not, we're going to move into these propulsion gaps and come down with a high probability. If it bounces, the if it bounces probability is never more than 50%, which is why with a stop loss, you have to have a positive risk reward, because every time you press that button, it doesn't matter how good that setup is, how good it looks, the odds are the same every time. There's no strike rate on a strategy. There's a strike rate on a return on investment. Strategy is an execution of a trade by pressing a button, a reason to get in. Where it goes as a TP and where it goes as a stop loss is what controls your strike rate on your trading. Nothing to do with the strategy. The strategy calls for you to take a support resistance bounce and put a stop loss somewhere. Where do you put it? That's got to be discretionary. Where's your TP? It's got to be more than your stop loss. So if you put your stop loss down here to encompass that in case it comes down and bounces off of that level, all of a sudden that now becomes a 2R instead of a 3R. Totally different return you're going to get in a year based on that and that. That's what makes the difference between successful and losing. Where that goes if you're using a stop. See what I mean? It's so complicated to make money using a stop loss. If I'm position trading and I press the button here and it comes down to here and I press the button again and it comes down to here and I press the button again and then it bounces up, I make money. What does price do all the time? Bounce at support and resistance and propulsion. What have we got coming up? A support, a propulsion, and a support. One of them's going to hold. 99% sure you will get a bounce off of one. I don't care if it bounces and then drops. All I need is the bounce to exit. If I'm a position trader, I can get out at break even with no loss. That's the difference between getting in, stopping out, and getting in, getting in, getting in, getting out with nothing is I lost nothing. The stop loss trader tried to get in, got stopped out. It came back down to here. They tried to get in. They got stopped out. It came down to here. They tried to get in. They got stopped out. It came down to here. They got in. It pulled back and then it pushed. They've lost, let's say 3% of their account if they're risking 1. So their job now from here is to make a 3R. They've got to get a 3R just to get break even. And it's got to come up to here. So they need a 68 to 71% pullback on this downtrend they've entered inaccurately 3 times on the 4th attempt just to make their money back. How hard is that? Why it doesn't work. You've got to hold that trade as well now. Yeah. So that trade that you take with that 3R, you've got to get just to get yourself back to a break even for the day. Right? As soon as it does that, what are you going to do? Break even. Oh, I'm not going to risk it again. I've already lost 3%. So what does it do? Break evens, and then it goes like that, and you go, oh, for God's sake. So as soon as it gets up to there, you wait for a pullback, you get in long, use another stop, and then you lose another percent. So you've lost 4% today, reading the market totally wrong, and the only trade that could have got you out of the problem was a break even because you got scared. Sound familiar? Not my fun way of trading. Weekly range hit on the US dollar CAD. Big push on the US dollar CAD at the moment. Out the highs. This is Canadian dollar weakness by the looks of things. Canadian dollar getting a little bit run over. So this is oil causing CAD weakness. Ryan, are propulsion gaps just another phrase for imbalance? I don't know. I guess I don't know what an imbalance is. What's the definition of an imbalance? There's a video on the website. Actually, there's a better one. Okay. Propulsion gaps explained. So I mean, this is again brings me back to this video. Yeah. Everything you learn in every course is the same as something else. So every time you buy a course, you are buying someone else's education that they have paid for. So if I do 5 courses and I then regurgitate all of that information to you and sell you a course, and you've bought those 5 courses that I've bought, you're just buying the same course again. You can change the names of things. You can change how to do things, at things, with things, different settings for things. Everything is the same though. Yeah. So this here, I call a propulsion gap. The reason I call it a propulsion gap is because I was taught that these were called propulsion candles. Other people call them impulse moves, impulse candles. Some people call them wide range bars. So if you've learned from M.A. Perry, he will have taught you that they're called wide range bars. But it's a large candlestick, and the propulsion gap, so this is a propulsion candle. The propulsion gap is formed when the next candle does not close down to the high of the wick of the previous one. So that causes a gap to form. You could call it an impulse gap. You could call it a wide range bar gap. You could call it a fair value gap, which is what I believe ICT calls impulse moves. Yeah. So this is a gap. It's an area where we pushed to a level, we had a massive bank injection, and then the sellers tried to come back and they couldn't. So these buyers that got to this level, yeah, managed to scream straight through every sell order available in the market at that level. And then when they finished the order, the sellers were unable to bring themselves back to the level where they sold originally, which causes a vacuum. Again, vacuum candles is another name I've heard these called. Yeah. Imbalance. And you call it what you like. It's a big order by a bank. I've got to call it something. I call it this because I was taught these are called propulsion candles. But yeah, it's the same thing probably. But there is a definition, and this is the thing you will find. It's like the fashion industry, right? In the fashion industry, my wife used to sell wedding dresses. In the fashion industry, they have this rule, right? So you have a dress. There is a point to this to do with trading, right? You got a dress. Yeah. So that is a dress, and it's made by Vivienne Westwood. Okay. So what I'm going to do is I'm going to put a sash across the top of it, give it a V-neck, and give it some shoulders. Right. The material is the same. The color is the same. The hem is the same. Everything else is the same. And I'm going to put a veil on top of it. As I've changed 5 things on this dress, it is now my design. It's mine. And I can now sell this. And Vivienne Westwood can come and say, hey, that's a rip-off of my dress. No, 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 no. Yours hasn't got a sash, hasn't got a veil, and it hasn't got a V-neck. It's mine. No, it looks exactly the same as mine. That's a complete rip-off. Prove it. Never hear from her again, Vivienne Westwood. She's dead, isn't she? But I think, I don't know. Don't quote me on that. Got a feeling I heard it on the news. But this is what you learn in trading, yeah? The guys that invented the word for that passed it on to someone who said, hey, this is called a this. And then someone said to him, well, this guy told me that that was called that. And you go, oh, right. So that's that, is it? Oh, right. Okay. So it's called that. if price doesn't come back to there, it creates this whacking great vacuum. Who passed it on to the next guy that said, hey, look, you see these massive gaps here, because he forgot what the word vacuum was. It now has become from a wide range bar to a propulsion gap, because Chinese whispers and 5 different things changing have made it what it is. It's a big candlestick. But you can go and pay for many courses that will tell you this is called something else. And all of a sudden, because it's called a fair value cap, it's much better. Because I can now pay $500 to learn about fair value gaps, which are nothing different. I don't know the fact, though, because I don't trade them, whatever they are. Yeah, there will be a set of rules. M.A. Perry, who invented the wide range bar theory, his wide range bar gaps have to be a news event, right? If you see a big move that was not caused by a news event, that is not a valid wide range bar gap. I remove that rule that it doesn't have to be created by news. Now it is a valid wide range bar gap. But I didn't call these wide range bars. I'd never heard the terminology until I came across M.A. Perry's work 7 years ago, who invented them in 1980s, right? But I'd been told they were called 2 different things before I even found out what M.A. Perry called them. It's a big order. Liquidity voids. Doesn't matter what you call it. So when people ask me, that's the same as an FVG. Yeah. The only reason people are using the terminology FVG is because someone sold them a course. ICT reinvented it, repackaged it, put a price on it, and sold it to you again and again. Someone else will repackage it, sell it as something else. This is what this industry does. Doesn't matter what it's called. Yeah, it's an area of price that is retraced to by banks and institutions because there is something called unfinished business where orders need to be rectified. This is where the imbalance terminology comes from. There is an imbalance of buyers and sellers in this area. Is there? Prove it. It's all theory. Everything you see is theory. It's theoretical. No one can prove anything because there's no centralized exchange behind any of this proving anything. It's just a chart supplied by your broker that plots a price that moves up and down based on what the broker does with order execution. One chart may have an FVG, propulsion gap, impulse candle, propulsion candle, liquidity void, imbalance, whatever, and another one won't because the broker quoted a different price and had a different spread. So does that help in any way, shape or form? Depends which broker you're on. Yeah. People email me all the time or send me messages in Telegram. You showed in the live room today a short on the pound odd. I didn't take it. Why? I don't know. But I'm using the same settings as you. But my broker didn't have a reversal alert there. It's because he quoted you a different price. Why did he quote me a different price? I don't know. Does it matter? What's the odds? 50-50. If this now goes up, are you going to moan at me? No. If it goes down, are you going to moan at me? Yes. If it goes up, can I moan at you? No. Let's get on with it. It doesn't matter what you do. If you press the buy button on oil now, do it. Press the buy button on oil now with 0.05 lots. Yeah, we'll come back this afternoon and see if you've made some money. If you haven't made any money, we'll put a plan together to get you out of the trade. Does it matter if there's a propulsion gap forming here? There is one forming right now there. Will that complete? I've no idea. We've got to wait 38 minutes. In 38 minutes time, there will either be a propulsion gap there or there won't be a propulsion gap there. What's it got to do with anything? Nothing. It's going to go up or down. Everybody's looking for that thing, aren't they? That makes it spot on exactly. This is going to work 80% of the time. This is going to work 90% of the time. This is going to work 50% of the time with a 2-to-1 R. God, I'd snap someone's arm off if they could show me that. Doesn't work. Doesn't happen, does it? So the long answer to a very short question was, is it the same as an imbalance? Whatever. You've deleted the question now, Ryan, as well. Can't even see what the question was. I don't know. There will be a set of rules which determine whether or not that paints what the set of rules is. If it's the same as the set of rules I use, which is basically none, if it's a big candle and it doesn't go back up there and meet that wick, it is. That's what my definition of it is. But if it's the same definition as someone else's, it calls it something different. It's exactly the same thing. Yeah. Why they're formed, you know, this is the other thing. You've got to stop looking for the whys. Yeah. There's so many theories around why this moves, why this thing moves. And none of these theories really help you in any way, shape or form, because none of these theories about, you know, this interbank price delivery algorithm thing that no banker I've ever met has ever heard of currently controls Forex movement. The banks and institutions are in clubs and they talk to each other on secret Telegram channels so that they can manipulate price up and down. May not happen. There's all sorts of theories about why price moves. These are inefficiencies in the market which need to be completed by buyers that have got offsided on sell orders, which they scale back into and drive price back to. May happen, may not happen. Don't know. No one's ever told me, proved it either way. There's always a reason for something. There could be 1,000 different reasons for something. If you get tied up in the why, you'll never do. So forget the why. Just know it happens, yeah? Why did that come back to that propulsion gap? No idea. It just did. The same reason it did all of these, and the same reason it will do all of these. Why do you need to know why? Just know it does. Why does the sun come up in the morning? Yeah? For hundreds and thousands of years, they went, whoa, whoa, not a clue, whoa. Then some bright spark went, there's a universe and we're rotating around it. Ah. Did the people before worry about why it happened? No, they just went, oh, brilliant, it's hot, now it's cold. Oh, now it's hot, now it's cold. No. Just do. Right, I'll leave it there because I've ranted enough today. Nothing much happening on the DAX. We are down at a support, so might be a good spot to buy, might not, don't know. I'm not. I'm out. I'm done for the morning on the DAX. Made a bit, not a lot. So we're back this afternoon. Get a nodding dog. Is gold a buy? I'll be back this afternoon at 2:20. We'll look at the US indices, have a look at everything else. News-wise today, be prepared for the unemployment claims at 1:30. So that's an hour before market open. So we'll have a look at what impact that's had on the market. Positive figure, negative US, negative figure, positive US in theory, but we'll see what happens. We had a big negative on the unemployment change, so would indicate possibly a plus on the unemployment claims, which means negative US. So we'll see what happens. Would be nice to get another negative. 2 negatives on the trot will probably bring that US down a bit today. And then we're in the hands of unemployment rate tomorrow. So we'll see how that all plays out today. I'll just be managing what I've got at the minute. Nothing to bank at the moment. So just watching, basically, specifically watching this. I've got this running on, not at the moment, but I have got this running on my other monitor pretty much all the time. After saying don't look at charts, I'm not looking at it because I want to close it. I'm looking at it because I'm waiting for that move, which I thought had come this morning, but it hasn't. So watching this eagerly to see if we get that yen strength follow through coming on this intervention. If we don't, then we might have to wait. So we'll see. But yeah, so we'll be back this afternoon. We'll trade the US indices. If you need me, I'll be in Telegram. Other than that, I'll be back this afternoon and 7:50 tomorrow, same time for the Frankfurt session. Have a good day, and I will hopefully see you guys later.